The overall CPI month over month was expected to rise from 0.3% to 0.4%, and that is exactly where it came out. So nothing surprising there. The core year over year was expected to remain at 3.3%. That came out a little bit cool at 3.2%, and the month over month core CPI was expected to remain at 0.3%. That came out at 0.2%, lower than expected. So, as traders are saying, maybe there's a little bit of a hint of lower inflation here. Maybe we're going to start to see an earlier rate cut than we previously expected. The New York Fed Manufacturing Index also came out. That was expected to come out at, well, the last one was 0.2%. It came out minus 12.6%. That's a pretty big drop in manufacturing in the tri-state area. Petroleum status report is due out at 9:30 this morning. That is the EIA. We've got 11 o'clock. Goolsbee due to speak, and at 1 p.m. we're going to send Andre to go get the beige book. All right. Earnings starting today. We had JP Morgan. We had Wells Fargo. We had Goldman Sachs. We had BlackRock. We had Citibank. How do you think those earnings and all that came out? Earnings per share and revenues came out. There was only one miss. Wells Fargo missed on revenue just by a little bit. But of course, the banks are doing well. VIX this morning down 18.38, almost 2% this morning. It was 19.74 yesterday at this time. The dollar index down to 108.72. It was 109.83 yesterday. And the yield on the 10-year after the CPI numbers came out, about 10 basis points lower than it was yesterday at this time. 4.69 last I checked today was 4.78% yesterday. Now, looking into the charts, what the S&Ps do? Well, on the daily, we're still in longer time frame and an uptrend. In medium time frame, balancing in shorter time frame, we are in a downtrend. We're going to break that today. Look at where the market traded right to after the number came out. Weekly kickoff high. The weekly kickoff high was 59.78. The high was 59.79 and the orders. So we missed that by 7 ticks. It's going to be an interesting level for us to watch today, and we'll take a quick look at that on the 30-minute chart as we get going here. Right now, the equities, the S&Ps are up 1.5%, NASDAQ up 1.74%, the Dow up 1.6% approximately. Everything's coming up roses so far in the equities. We'll see if that lasts today. So when we look at the excess we had on Monday, we pointed that out yesterday. Yesterday, we did have an overlapping to higher range, very indecisive daily bar here. Very, doji-like. As we were waiting for the CPI numbers. Well, the CPI numbers are out. Investors and traders are happy about that. Let's see what we're looking at here on the 30-minute chart. So a couple of hints that we had yesterday, and it was a very, very difficult trading day yesterday, even though we had some pretty solid nuances to lean on yesterday. In the S&Ps, we opened above range in value. We did close the gap. We had the late spike to the upside. Where did that go? There it is. There's that late spike to the upside. We were looking for that to possibly hold. The market did get through there, traded into value right to Isaac's level right here. And Jay was also looking at this level, putting in the low. We didn't quite reach the point of control from Monday. However, what doesn't happen is as important as what does. The market recovered. We had our second higher close off this low here. Value did move higher. We talked about that in the afternoon recap yesterday. The late spike to the upside only means that we're probably going to be expecting value to end the day higher, or the market to sometimes just continue to push higher. The late spike to the upside yesterday, and the fact that we did have most of our value yesterday does say that the late spike did what it was supposed to yesterday. It moved value higher. All right, what are we looking at now? Well, geez, man, we've got this thing just racing to the upside this morning. We do have a little bit of potential resistance right up here at 59.78, the weekly kickoff high. What do we do Monday? Weekly kickoff low Monday, Wednesday, all the way back to the weekly kickoff high. We're getting very rotational here. If we break that level, there is space above. There is space above. There's a lot. It's going to be a while before we're going to be seeing any visual targets. Last week's high, of course, would be one of them at 60.45 half. Naked point of control above that, perhaps around 60.55. We have to see if we can find some momentum. But we are holding overnight inventory to the long side after the number came out. We are going to be opening with a gap, and gap rules say we can't close that gap relatively early. We're looking for opportunities in the direction of the gap, which would have us looking for longs. Would love to see him move back to about the half back mark in this 730 bar here. Might be an interesting area for us to look for an execution, and at the very least, an opportunity to limit risk. The profile yesterday: normal variation day, neutral day. Normal variation, neutral days use a lot of the market's ability to facilitate trade. What's the market's job? It's to facilitate trade. What's the market doing? Looking for new levels to facilitate trade after those numbers came out. Let's take a look at the NASDAQ now. Wally. All right. So again, longer time frame. Yes, the upside structure is intact. That's the word I'm looking for. Medium time frame largely balanced. Shorter time frame downtrend. We see this nice, tasty little downtrend line right here. It's coming across the weekly kickoff high here, maybe on about Friday or Monday, but we'll see what happens then. So again, excess on the low on Monday. 2 days really of kind of indecision, Monday and Tuesday. Now we've got the information we're looking for in the CPI numbers. I forgot to mention open interest in the S&Ps, but that's all right. Yesterday, we added 2,200 in open interest yesterday. It was a normal variation neutral day, so there's nothing really we can look at that. Another indecisive day. We did add a little bit of open interest. We lost open interest on that push to the upside yesterday, value-wise in the S&Ps. I'm looking at that as short covering yesterday. Maybe a little bit of new longs coming in, and those new longs are certainly starting to get paid. Where did the market push to right after the number came out? Well, basically right to the 5% off the all-time high. Always kind of keeping these on my charts when the market is pulling off, and we are seeing, again, shorter time frames. Trend is intact. Lower highs, lower lows. We've got some work to do before we're going to be able to break that trend. Take a look at the 30-minute chart now. Here we go. All right. So, again, value overlapping to higher after the late spike to the upside. Again, late spikes don't indicate direct movement. It's movement over time. So we're seeing value low, value high, overlapping to higher from yesterday. So the late spike did actually succeed in bringing value higher. Overnight inventory is obviously long, trading right to the 5% off the all-time high. Going to be a challenging trading day today, I think, as the traders and investors digest this CPI information. I think it's going to be, a good trading day. I mean, they're all good trading days. Follow your plan. Any day that you follow your plan is a successful day, even if it is not profitable. So before the number came out, I mean, overnight inventory was flat. The volume that came in on that push to the upside. Treasuries ran to the upside. Yields bailed to the downside. This is good news. And as long as there's no bad news, the market does have a tendency to continue to push to the upside. Even in the S&Ps, we've got a higher low. Now we've got a higher low. We've got a higher high. Now we've got another higher high. In the shorter time frame, this market is exhibiting a trend to the upside again in the very short time frame. See how that plays out. Again, the profile yesterday: normal variation, neutral day. And again, eventually by the end of the day, bringing value overlapping to higher, which is acceptance of higher pricing, which is what we look for after a late spike to the upside. A late spike in the S&P and the NASDAQ yesterday didn't really provide decent execution levels. Well, in the NASDAQ until last night, we looked below that late spike base. We rejected. That became support, and we've been basically rallying ever since. And wow, what a big move to the upside here. Bam. Hopefully, if you were in the market, you were the right way on that. I don't play major economic numbers anymore. I used to. I've had some unbelievably fantastic days, and I've had some really horrible days. And if I add them up, the good and the bad, over the years, I'm about even. So I've made the conscious decision. I'm not holding anything into these big opportunities like this. But if you did, I'm hoping you were the right way. If you were the wrong way, that was a pretty tough morning. There's still time. The beginning of the trading session as we speak. So, crude oil. The volume in March is greater. Topstep X still has the August contract, or the February contract on there. It's fine. The volume is just about even. So we just did not move that contract in the Topstep X platform. Probably tomorrow. Weekly kickoff high in the February contract is 79.10. In the March contract, if you have chosen to trade the March contract, weekly kickoff high is 78.30. Weekly kickoff low in the March contract is $71, and it's 71.80 in the February contract. Just so you're aware of where those are, because weekly kickoff high in the February contract has been very resistant to price trading above it. Yesterday, on a pullback off that day, we lost about 11,000 contracts in open interest, which would indicate long liquidation. But again, in the middle of rollover, it is very difficult and very blurry to judge the auction process during rollover using volume and open interest. If it was an open interest, I would say, yeah, that was some long liquidation, but you never know what the volume and open interest is doing around rollover, and we're in the teeth of rollover right now. But again, you're fine trading either the Feb contract or the March contract. Let's look at the 30-minute chart here. Here we go. All right. So here was our test to weekly kickoff high on Monday. Test Monday into Tuesday, Monday night into Tuesday. Range bound activity yesterday kind of makes sense. And it's a bit of a B profile, which indicates long liquidation, which would be supported by the drop in open interest. Well, long liquidation power away from the marketplace. And again, it's very difficult to judge that during rollover. Overnight inventory was largely flat. We are currently testing yesterday's regular trading hour session high. That gives us the opportunity again to limit risk if we're going to be taking opportunities at that level. We've taken out the overnight high. If we maintain above the overnight high, maintain above the initial balance high or the high from yesterday's regular trading hour session, I could easily see another test of the weekly kickoff high up at 910 in the February contract. If we can't hold above the overnight high, if we can't hold the IB high, because once we put in the high and the low yesterday, what has the market been doing? It's been range bound. Buy the low, sell the high, buy the low, sell the high, buy the low, sell the high. If we don't see any participation, momentum, volume, or anything in Delta that might give us an opportunity. But again, during rollover, Delta is very blurry. So again, just pointing out the B shape, the lowercase b shape of the profile yesterday would be indicative of long liquidation. The loss in open interest agrees with that. However, how much can we trust that during rollover? Now, gold. Let's take a look. What's going on here? Medium time frame remains range bound. Since I don't know, about the middle of November when we put in this low, about the end of November when we put in this high. Price has largely been inside of those. So we're really looking at sort of a medium time frame uh, balance area. I remember being very excited about the breakout outside of this area of balance here, which did provide a decent opportunity, which really kind of puts in our weekly kickoff high. Weekly kickoff high is about 110 points, which isn't all that huge. I'm looking for something to happen here. Good news with gold is we saw a pretty decent jump in open interest yesterday of 22,000 contracts. Overall, so far this year, since the beginning of the year, we've added 55,000 contracts. Now, there is a rollover coming up that it may have something to do with it, but we're still pretty far away from it. Another thing that I'm finding interesting in gold is all but one day since the beginning of the year, we've had negative delta. So we've been increasing open interest at higher levels against negative delta would indicate longer time frame buyers in the marketplace. We've seen examples of how powerful this can be. We saw a lot of negative delta here and an increase in open interest. We had a nice push to the upside, really just looking for this swing high as a termination of that trade. That's pretty much where the market finished that move. Are we setting up for another move like that? I don't know, but I'm getting a little bit excited about looking for something to happen, something good to happen here in gold in the coming days or weeks. We've got oodles, and yes, that is an industry term, oodles of weaknesses in structure above the market and below the market. Weaknesses in structure, naked points of control, gaps, all of those things that are visual targets for price. Overnight, look at that range from yesterday. Wow, just not a lot. We did have a late spike to the downside that was rejected pretty much yesterday. Again, adding 22,000 contracts in open interest and basically holding price above the base of that late spike. We did look below that, but we did reject. We did hold above it through the rest of the day. It's been all buyers ever since. Did we see some new buying coming in here? It seems as though we have been seeing some increases in open interest. If this was buyers, they're certainly getting paid. Overnight inventory is exceedingly long. The number came out and it gave us a really decent push to the upside. We do have a naked point of control, 27, 21, 40 above with which to target as far as upside targets are concerned. But with the overnight inventory this long, okay, we've opened with a gap. If we can't close the gap relatively early, blah, 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 what are we looking for? Well, we should probably be looking for longs, but be patient. Look for the right opportunity. Look for the right reversal. There could be a pretty significant overnight inventory adjustment before I'll find myself very comfortable looking for any kind of longs here. It's a long way to close that gap. Think about how hard that trade is going to be to take. If we come all the way back down and close that gap, how hard is that trade? It's going to be against the most recent market activity, which our good friend Jim Dalton says is sometimes the best opportunity. Sometimes the best trades are opposite the most recent price action. However, when the same breath says, "Don't fight a directional market," what are we doing with that? It's a very difficult thing. It'd be a tough trade to take, but I think it's a pretty decent opportunity as from what we've been seeing in the longer time frame and the overall fundamental kind of look at gold here. All right. The profile ISO is like normal variation day neutral. Price is looking to facilitate trade. That's the market's job. It facilitated trade in this area for 2 days. It's done facilitating trade. Here it's looking for new levels. So you're going to pull back for a better trade location. Is it going to continue? Only time will tell. Ladies and gentlemen, stay tuned as the market turns. Take your deep breath, folks. Make sure you remain humble, grateful, creative, and centered in your trading today. Pray for peace every day. Let's have a good trading day. And we've got coming up here in Fast Markets along with Coach Jay. We got Andre coming in to lead with me along the way. It's going to be a great trading day. Folks, I don't have anybody to meet by the coffee machine. So there he is. Hey, James, meet me at the coffee machine. We'll be back in just a second for Fast Markets. Let's get ready for a good trading day. Trade well, everyone.
Let's go.
Yep. Yes. Well, everybody, Topstep TV. And he's unfortunately out today, so you're stuck with us four. You got number 23 on the big board. in the house, Coach J Starf at the buzzer, and head coach of the Lunatics. And you know we love you. Saw him in opening call. Hogue in the house. We are about to open. Let's get right into it now. All right, Hogue, for those that are just tuning in, may have missed opening call at CPI print. Wasn't nothing bad in there, so off to the races we go to the upside, Hogue.
Yeah. Outside of balance. We are opening out of balance this morning. In the S&Ps, we traded right up to the weekly kickoff high, 59.78. 59.79. The orders is the overnight high. We're just kind of holding off of that. Pretty sizable opening range here at 8 points in the S&Ps. 39-point opening range in the NASDAQ. Question is, are we going to pull back and going to give us a chance to get long at better pricing? To be the high. Thoughts?
Yeah, well, throw it to Jay. Jay, you said in the green room we're up 1.5%. How much more meat on the bone is there?
Yeah, that's what I'm looking at. We did reject at the highs in the high of the S&P is the 20-day moving average to the downside, right around 59.80. So I'm not surprised at a little bit of a pullback here. I'm looking at a couple areas, 59.55, which is the high of that CPI candle, seeing if that holds, maybe for opportunity to get in long. But 1.5% up, I'm going to be patient and not jump into anything, but also not a market that I want to fade unless it's clear that we're going to sell off.
Coming off an $8,500 day yesterday.
Beautiful.
Thoughts, Jerome? Thoughts? How do we
Good morning. Good morning.
approach today? Yes.
Being patient. Fully agreed with Coach Jay. There is a huge daily range so far. Unsure about if we accept the price or reject. So far, it looks like the market want to go higher. It rejected a 314.5 level I had, which is 315-ish, let's say. And the S&P around 59.72. Let's see if today the S&P tries to reclaim the 6,000 level. If so, we will probably stay bullish if we have couple signals indicating a strong bullish trend. Otherwise, we'll probably retrace half or full of the CPI candle, which is 300 points, but it's possible, right? ACH. So couple scenarios possible. Let's see. Let's be patient. Let's set up the 15-minute opening range, and then we'll build upon it. But very huge volume on the first minute of the opening so far.
Oh, yeah.
Just that 6,000 level, Jerome, puts us at 2% up on the day in the S&Ps.
Good stuff.
Sweet.
6,000 even? Really?
Sweet.
6,000 and a quarter.
Cool. Yep, 2%. Thank you. So last trade in the S&Ps, 59.70.
Yeah.
So about 30 points to go there if we do want to get 2% up. Take a look at the crude oil, $78.36 a barrel. We did see it above $79 earlier this week. And NASDAQ just chilling around 21,250, 255 to be exact. Last trade. Nothing on the tilt just yet. I guess 72% short in the YM. Again, we just opened up. Got a lot on the calendar today. Hogue, with that Eddie out, Hogue and I will be keeping an eye on the juice, see what we got coming out. Barkin's supposed to be speaking here any moment now. We'll keep an eye out for that. Oh, wait, was that him? Oh, no. That was Hogue. That was Hogue. That was not Barkin. That'd be hilarious if he did step up to the mic and start doing that. And we got Kashkari speaking at the top of the hour. EIA crude inventories. We got Williams speaking. We got Beige Book. I'll go get that later. For the time being, we'll keep an eye out for Barkin. Well, there's Barkin. Damn, Barkin got started early. I didn't know we were going to have Barkin on Topstep TV. Yeah, Barkin's on Topstep TV today. That's amazing. What a get for us.
Well, Jerome, 79.78 weekly kickoff high in the S&Ps. That's really where the market traded to after the number came out. It's been a little bit resistant. Kind of looking at that as a relatively important level for us today. We traded a weekly kickoff low in the S&Ps earlier this week, and now here we are at the weekly kickoff high. We did have some earnings come out this morning. A lot of banks came
Oh,
out.
yeah.
All of them.
On the bank-
Most of them
on the
for the
banks.
for the most part, positive.
Yeah.
Wells Fargo did miss on revenues, but as far as everything else, all green for the banks. Of course it is.
Business is booming. I saw JP Morgan traders had their best quarter ever or something to that effect. Like, of course they did. All right. Jay, you were going to say you had a question for Jerome.
What did your day look like yesterday? So we had, kind of a two-sided trade all day, right? There was opportunity to the long and the short side. Did you take both sides of it, or was it, were you kind of leaning one way and just waiting for that opportunity?
Good question.
Let me share. Thank you for asking this. Let me share my chart.
Great
I'm gonna
question.
try to show the executions. I don't activate enable them, so I don't know if we're gonna see them well. Oh, messy. Wait a second.
It's okay. We can get to it later. The markets are actively moving.
Basically, it was a single direction. I had a plan, waited for it. Oh, here you go. Yesterday was 14th, right? Yeah, here you go. Yep. Do we have it?
There it is.
Okay. Yeah. Okay. Got you. Nice.
Let's go. So this was just a scratch I got earlier in the session. So basically, I waited the first 15 minutes of the opening range, and then I saw the 4-hour candle having a very strong push up, and then a very strong selling movement. So I tried to catch it here, very strong momentum. I covered here, and then it went back up and instantly, not instantly, of course, these are 5-minute candles, but I was trying to see some more structure. So I decided to re-enter here. And in the end, the whole move was from 2190 to 830, but I kept re-entering and exiting. $150 points with 3 contracts.
Okay.
That's basically what it looks like. I basically entered almost all the time with 3 contracts. Tried not to catch the low and the high, but just was kind of covering and securing the trade. And once I was seeing enough momentum, I would re-enter until my target was reached. Even though I could have held it longer, that was my goal. My goal for the day was to try to reach above 6,000, if possible, above 8,000. I got 8,500. Didn't try to reach 10,000. That was my plan. Happy that I respected it. W discipline, W trade.
Order
So yeah,
filled.
great day yesterday.
Nice.
Wow.
Nice.
All shorts.
Feature there. Nice feature. Easy review. Shorts are trying to come in here and push this thing.
That was a Jerome trade, actually.
Taking money to the Jerome
That is a
side.
big
I like that.
Jerome.
We might need to do that today again.
Yeah.
Sure.
Yeah, we'll
Sellers
see.
are trying to come in here.
But yeah, yesterday was
Holding
a very, very catchy day. Happy this one played out, but it have not played out completely.
Yeah, I can see that. We got 76% short in the S&Ps right now on the tilt. 69% short in the NASDAQ.
Yeah, we got your
Heavy
55 level in the S&Ps.
We did. We did kind of right to the high of that candle. We bounced from there.
Yeah.
Kind of similar to yesterday on the open, where the first 15, 30 minutes of the market, we kind of had a range. We could trade this like a range bound market right now until the market decides a direction. But yeah, that 55 would have been a decent buy, but I think I take anything right now as a scalp until the market shows it wants to go in a direction.
You see its teeth.
Buyers
Trade
back. Yeah, buyers said, get back here. You are not feeling as low right now. S&P or NASDAQ casual 50,
Had some
60
pretty
point bounce
negative,
right there.
negative tilt down there as well. Almost
Oh, yeah.
8% short down at that level.
There was. And we reversed on them. Again, Hoag's got the keys to the house account today. Yesterday, tricky trade for the house account. Jerome was able to
Very
carve it
solid
up.
opening ranges so far. So we have volume, opportunities, and liquidity. So we'll stay safe. But so far, the Nasdaq is 100 points opening range, 15 minutes, and the S&P is 18 points. So the S&P can be between 20 and 30 points. I mean, 30 points on a 15-minute opening range on the S&P is perhaps not the average, but not unusual. 20-ish would be average, I'm pretty sure. And above
Right now
100
would be
is average for
18
the
points
Nasdaq.
in the S&Ps.
Taz Trader in the chat says, that was a painful trade for the shorts there. Yes, it was.
Yeah, it was.
Yes, it was. He just, like you said, saw 76% short tilt in the ES, and they just flipped it right on the shorts right there. And we're cooking to the upside now. 59.68. Last trade. Oh, remember yesterday around 3:30 or so? What was that 1,000 lot? Do you remember the price that came in on the bid on that 1,000 lot? Well, during at the buzzer.
Man.
1,000 lot. You guys.
Is that in the S&Ps?
Yeah.
It was the S&Ps. Yeah. Just
I didn't see it, but I could take a look.
Was that spoofing?
Yeah.
Might have been.
Did
an
it
odd
get
time to
filled, or
spoof.
did it?
We don't. We were in a meeting. We were watching at the buzzer in a meeting, and then Hogue said, "Oh bleep! There's 1,000 lots sitting on the ES bid. All good.
Right up around 58, 90, 92. Right up in that area. It was right around
Nice fill.
315-ish. Jay, if you're going to find it.
Okay, I'll take a look.
All good. All good. I was just wondering offhand.
Don't need to, but
Always like to know. What the
I'm
paper
just
is.
looking at the dome. Like, what is that doing there?
What is that doing there at
1,000
this
lots
time?
bid.
At this time of day.
Think they got the number?
Yeah.
Right?
I mean, you know how I feel. Anyways, 10-year yields have retreated quite nicely. Back to, what do we see here? Yeah, 4.65%. We saw 4.8% yesterday. It is a huge, huge pullback in yields. Big rally in prices. Everything's okay again. Hoop made the joke. Cattle is on the move. Thank you, Hoop. Cattle is on the move for all you cattle traders. 70% short in the NASDAQ right now. Starting to see these shorts pile in again. Boomer Brian, I will get the beige book this afternoon indeed. Let's see what's cooking over on LaSalle and Jackson, downtown Chicago. We'll run to
I
Goolsby.
did
who
mention
is-
that
I
during the
saw it.
opening call. We were going
I
to
heard
send you
that.
the beige book, Andre.
Yes. Speaking of Fed, the Chicago Fed, Goolsby is scheduled to speak in a few hours. But right now, a couple buyers stepping in.
Buyers having momentum. Nice momentum.
Yeah, those shorts. Yeah, Taz Trader, you called it. Crude is cooking. Crude is cooking. Thank you. Who?
It was kind of a rite of passage on the trading floor.
It was.
You know, they had to send you to some crazy jaunt. I remember they gave me an order and told me to take it to the mud pit.
The mud pit. Yep.
Where's the mud pit? It's over there.
Oh, I was hell bent on getting that beige book, man. Security was looking at me like, "You're an idiot, kid." I was going to get that beige book. So no, I came here to get that book. I can't leave until I come back with that book.
I gotta have the book.
I gotta get that book. And so, kid, there is no such thing as a beige book. It's all electronic. I go, those mother so. That long in the NASDAQ and pushing higher here, 21,300.
So far, break the high of what's looking like the high of the opening range. So 310 for the Nasdaq and 74 for the S&P. If we can close above and pull back around 314 half on the Nasdaq, I think a good long can be tried there. If we keep pushing up today, there is a good chance we don't have a lot of pullback around the area that's being set up here to catch an entry around these levels. If we're wrong, we'll be wrong fast, and that would be a tight stop. But if we're right, it's going to go fast. We can do the break even very fast, perhaps add on it, take portions, perhaps re-enter. So that's a potential long play. If we have a strong selling 15 minutes, I'm going to watch out the reaction around 204 and see if we can bounce
304
around this zone like we just did previously. If not, or if we can close below and perhaps pull back, there can be a short play. So let's see how the market reacts. It's a very huge range for my kind of plays today. So I might sit on my hands for an hour, perhaps more. So I have no problem with that. So that's my plan for today.
I'm liking these
In
little
these
like
kinds of day, you don't want to blow your account in a glimpse, right?
That's right.
It can go very fast.
Oh, I've done
So
that.
if you want to take a
Oh, yeah.
trade, yeah, we all did, right? So
Oh,
if you take a trade, you want to be very confident and also zero frustration, zero regrets after the trade if it's a loss. You'll tell yourself, okay, that's 100%. There's all the reasons I should have entered it, process over profits. A win rate, a success rate, right? It's not 100%. So you got to take it, but you got to wait.
Agree. Okay, S&P's looking stronger. The Nasdaq ever so slightly. I wouldn't say one's leading, one's lagging just yet. 59.75 last trade in the S&Ps. High about 4 points off the highs there. 72% long in the
59.
Nasdaq. With those
78's
76%
weekly kickoff high.
upside. Okay,
Mhm.
we're cooking now.
S&Ps, yep.
JP Morgan's on their Q4 call right now.
At 55,
Order filled. 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 Order filled.